Well, good afternoon, everyone. My name is Robin Dolezal. Today is July 26th. With me, as always, is Alex Pars and Dan Nentel. Together, we are with Ironwood Financial. How are you, gentlemen?
Doing well, doing well.
Chilly, very cold.
I don't believe you at
That,
all.
that's because it's only been like 30 days in a row over 105, right?
That's
Right.
right. That's right. Well, I am. Obviously, you can tell I'm not in my normal environment. I'm in California. I think it's 93 degrees here today, which is a little warm for them as well. But hey,
No,
I
no
will take it,
sweatshirt.
right? I actually do have one in my bag, but that's for different reasons. But anyway, well, good to see you guys.
Yeah,
Good to see you, Robin.
yeah.
And how's your summer going?
Hot.
Yeah,
Yeah,
it's seems a bit more unbearable than usual.
yeah. You've seen a lot of the inside walls, I imagine.
Yeah.
Yeah. Well, good. Well, it's good to see you guys. Obviously, the Fed just met. I think they concluded their meeting an hour or so ago. I think he did his press conference, so we'll chat about that. It seems, Dan, we'll start with you. I mean, it seems like the market's finally happy. I mean, it wasn't terribly unhappy this year, but every time I look down over the last few weeks, it seems like I see green numbers and not red numbers.
Yeah, reality is about mid-June, we got some inflationary numbers that showed that we might actually get to the Fed's, I guess, hopeful mandate of 2%, and we've been on a kind of a nice little rally for about a month. We broke through, as we've talked about this year, the market's kind of been in this channel where at the bottom there's this resistance and at the top there's support where money sells or goes in and money sells out, and it was between like 3,900 in the S&P and about 4,300 in the S&P. So that was the channel. It just kept bouncing back and forth. It would get excited because the Fed would say, oh, we're almost done. And then it would get unhappy because the jobs report would be hot or inflation was hot. And we finally passed through that 4,300. We're at about 4,550, I think, last time I looked. And that was kind of a trigger for us. We kind of looked at that would get the S&P at the higher end of appropriately priced. So I know that as a firm, we took some profits on, unless people had a mandate to be more aggressive in the past week. So we're pleased with what the market's done. It's a confusing world, though. I tell you that much. I was just playing around. Here are some. If you go online today and you said, "Well, today a good thing," did raising rates 25 basis points. Everything I read said that was already priced in. And if they said 25 basis points, we were going to get a whole lot of nothing, which is kind of what we're getting. Which is what a lot of people think we'll get for August and some of September. And a lot of people are forecasting a good fourth quarter. Had they said, we're going to raise it 50 basis points, they were anticipating about a 1 or 2% decline over the next 5 weeks. And if they said zero, then we were going to get a 1 or 2%, increase over the next month or two. But I'm just looking, here are some headlines to give you an idea of how difficult this can be for those of you that just go on to Yahoo or Bloomberg or MSN or Fox. The very first one is, no chance we're having a soft landing. Stock market strategist gives Powell's Fed it no credit, no mercy. A bear market's coming. And then you read about this fellow, and he's a cryptocurrency salesman, and he's bullish on gold. So no wonder he's putting out that headline. The next one is, earnings are so hot, markets know it's showing no signs of slowing down. And so, I mean, they're unlimited. Fed meeting ticks higher. Powell says future hike depends on the economic data. The next one says, 22-year high in interest rates, markets due for a crash. So reality is people are looking to grab your attention and have you go down that rabbit hole as we've talked about. There's not any economic data that we're super nervous about now, but that could show up. Reality is the markets, the economy is still really hot, but know what else is hot? Earnings. Mm-hmm. And companies are coming out like crazy with better, even small regional banks. Remember in March when we printed $500 billion to bail out the banks? The banks that actually made it, that didn't receive money, they're showing better than expected earnings. I mean, the economy's strong, companies are strong. If you look at the S&P 500, you might say, "Oh my goodness, what a wonderful year! It's up almost 18 or 19%." But the funny part is, if you remove the NASDAQ stocks, the top 5, the big mega stocks, Apple, Microsoft, Google, Amazon, and NVIDIA, it's up about 11%. That's more realistic with what most portfolios should look like. Large caps, mid caps, small caps, internationals are all up around 10.5 to 11%. That's probably a good benchmark for what people are looking at. You Some of the stocks that did well last year, looking at Raytheon stock or Lockheed Martin, they're getting pretty beat up right now. So those could be anxious for some people that have kind of been like a gold play. They're kind of contrarian to the market. But reality is this: there's not anything that I can think of as I sit with Alex and David and that we're super nervous about right now. And so the market, I think, is doing what we've been waiting for it to do. We thought it might start in May, but it started in late June.
Yeah, right. Well, I mean, Alex, it seems like at the beginning of the year, any talk of soft landing didn't seem like that was possible. But, as Dano's just mentioned, I mean, the market's seems pretty happy. It seems inflation's now closer to 3. I mean, the economy's awfully strong. It sure does seem like we're not in a hard landing.
Right, and that's something that's, people forget about how agile the Fed is. So just to go back to what Dan mentioned, a minute ago, when a couple regional banks failed, boom, here's $500 billion. So just because the Fed is only, raising rates at their every 6 week or so meetings, doesn't mean that they can't step in and do something in case of an emergency. So I was never someone who was thinking we were going to see a hard landing. But I think what we're seeing is a stronger economy than anyone even anticipated. With these headwinds that the Fed has put out there, the quantitative tightening is along with raising interest rates, the economy is just stubbornly resilient. So that's great, I guess, unless you want lower interest rates. But interestingly enough, one thing that Powell was saying today that's very interesting, very important was, hey, based on the June inflation data, that's just one data point. Therefore, we decided we're not going to hold steady. But he made no commitments whatsoever for the future. And previously it was, well, what are you going to do? Well, we probably have another couple hikes coming. This time he's like, wait and see, wait and see. Before the next meeting, they've got 2 sets of data coming out for both inflation and jobs. And so if we get 2 more data points that look like June, this could be our last rate hike.
Yeah.
That we just saw. So this is something, I saw another article that was, now's the time to buy bonds because we are at peak interest rates. So a lot of good potential there based on the commentary from the Fed and just where we are in the cycle of tightening.
Yeah.
So again, optimistic. The small caps, mid caps still look pretty inexpensive. Bonds look inexpensive. Could have a very good second half of the year.
Yeah. So you weren't surprised by anything that happened today?
No, I mean, it's kind of fun. Again, if you're bored and like this sort of thing, watch the question and answer session. So, okay, what's your question? What are you guys going to do at the next meeting? Well, we'll decide that then. Next question. What are you guys going to do at the next meeting? Well, we'll decide that then. So it's like 45 minutes.
It really is. I just watched it and was kind of giggling the whole time.
It's like, how many different ways can you phrase, what are you going to do at the next meeting?
Yeah, right. Right.
Now, one thing to keep in mind, Alex, you just put on, many of the articles are talking about how could the Fed raise it one more time? Sure. They told us in May that they could do 2 25 basis point rates this year, but then they also said there's a really good chance that we might do a decrease of rates in 2024, which again, we did take some profits in the last week because we passed through that magical number of 45.50 to take a little bit of profits and maybe have some cash for a buying opportunity. We did also take our 2023 bonds and we went a little further than usual. I think we went on for almost 5 or 6 years compared to our normal 3 or 4 years on a bond ladder. Reason being, if they do decrease rates next year, or if we've had our last rate increase, that's a really nice little profits opportunity for the bond market. And realize this, our bond ladders right now, forget about treasuries paying 5.4 or short-term treasury, even 100% liquid money markets paying 4.5. The bond ladders right now are paying almost 6.7, 6.8%. So it truly provides a hedge that we haven't seen in 20 some years. So there's reason to actually feel,
I mean, you could almost call that sexy finally,
Finally.
Yeah.
Well, good. All right. So our next Fed meeting has got to be, 6 weeks away, puts us mid-September.
I didn't double check his math, but he's probably right. He said 8 weeks.
Oh, okay.
So I wouldn't be surprised if it's the end of September.
Right when things cool off for us.
I hope.
No, that's Thanksgiving.
That's right. We gotta get through October. Well, wonderful. Well, thanks, guys. I appreciate your insights. Always good to see you, and we'll talk again soon.
Yeah, hold on, let
I
me throw
should
up our
say,
disclosure.
you'll put your disclosure. Obviously, if you folks are watching and we didn't answer something you had a question about, please let us know. You can also reach us at 888, or actually, no, I should say 520-318-4600. Until then, be safe, be happy. We'll talk to you real soon.
All right, take care.
Thank you, guys.
Bye, guys.